Hello, everyone, and welcome to this session of Inside Embedded with the amBaaSsador team and our great friends at Treasury Prime. And you're in for a treat today because we have this dynamic duo, each coming from different perspectives, different education, different experiences in the space that led them both to Treasury Prime and now serving community banks and credit unions in a new and exciting way with embedded banking. I'm going to go ahead and start with Remy Carroll. Remy is the COO of Treasury Prime. And Remy, we're going to get into it in just a moment, but you didn't have the most direct path, I wouldn't say, to a COO spot. Maybe you feel differently, but I want to discuss this with you. And we're also joined by the one, the only, Jeff Nowicki, Chief Banking Officer of Treasury Prime. Before we go any further, welcome, gentlemen.
Thanks for having us. Good to be here.
Being here. As always, I guess I should talk about you as well, Steve. You're there.
I mean,
As always.
I'm just the pretty face down in the corner, though. I mean, I'll just say yours are pretty.
Yeah. And you do it so well. You do it so well, my love. But thank you, gentlemen, for joining us. Why don't I go ahead and get the party started? Steve and I will just ask you some questions. We have various questions outlined that we want to chat with you about, but as things hit us, we'll also just want to dig deeper here and there, you guys. So, Remy, I alluded to the fact that you, from my initial view over the course of your career, I don't know that I would have said, okay, engineering, boom, COO. Tell me a little bit about your background and how you got to Treasury Prime in your role, if you don't mind.
I mean, I thought that that's just how it happened for everyone, but I can talk about it. So I've been at Treasury Prime for close to 7 years. So since close to the beginning of the company. And I've held various roles at Treasury Prime. I think my transition to being a COO happened at this particular company. When I first started at Treasury Prime, I spent time in engineering. In the early days, basically everyone was contributing to building the product, but I also spent some time doing bank sales. So I spent time on the phone, conferences, cold calling, whatever it took to start to work with our earliest customers at Treasury Prime. Before then, my background really was in engineering. I spent a lot of time in the technical field, everything from hardware engineering to software, product management, at large companies like Microsoft to really tiny startups. And at some point in time, I found myself at Silicon Valley Bank working on the API banking team. And I had the opportunity there to work with the two founders of Treasury Prime, Christine and Jim Brewster. I left Silicon Valley Bank, and a little while later, they started Treasury Prime, and they called me up and they asked me to join. That's how I ended up here.
So let's be clear. You left SVB before we all really started.
Yep.
Do not blame Remy, is what I'm hearing.
It wasn't me. I promise.
Okay. I'm glad that we got that on the record because I've been wondering secretly about it, and I'm glad I had a chance to ask you about it if that was your doing. Just kidding, sir. Thank you for sharing that. And I love, by the way, Remy, that you admitted to the fact, or you embraced the fact would be more appropriate, that in the early days of an organization, everyone's involved in building the product. Everyone's involved in selling the product. And that is just the way things happen. And now, Steve, I know I should allow you to take a turn here, but now I'm interested about Jeff's story because I know Jeff, the other C-level here on this conversation, Chief Banking Officer of Treasury Prime. Jeff, you actually started in working in banking and then happened to find yourself out here alongside Remy, fighting the good fight in the embedded banking space. Love to hear a little bit more about how that transition happened.
Sure.
And is the bank still around? Or was there some catastrophe that you caused at the bank that led you to Treasury Prime?
Actually, 2 of my last 3 banks are not going to be around in the next couple months. So I'll get to that.
I'm sure relation and not causation.
Yes, that's right. So yeah, like you said, I'm banker by trade and education. So for the last 18 years, banking has been the focal point of my career. Started out big big custodial bank with Brown Brothers Harriman, moved to a couple community banks. Spent a lot of time at Radius Bank building, I would say, the early-ish days of banking as a service. And when we were building those there, you were building a full-on bank each time. It was a direct connection in. You were working with that fintech. We were partners with a larger one called Aspiration, and that's really where you get thrown into the fire when you build a bank from scratch. Essentially, there's a lot that you see, a lot that you learn, that you know. And so we did that. I did that for a while. I found myself moving around to a couple other banks in Massachusetts area, and really found my specialty in really growing deposit bases within banks, and building that up. While I was lucky enough of getting that under my belt, I met Chris and Jim as they were starting the Treasury Prime. I was lucky enough to be the first person to pick up their phone calls when they were dialing and trying to figure out if they had a company. And so I was the first partner, and really started building Treasury Prime with them from day one. It took me 4-ish years to actually join full time, but
Okay.
it's been a great almost 5 years being partnered up with Remy and the other folks at Treasury Prime.
Well, I love this.
So
Couple of follow-up.
no, I have a quick question. When it comes to seniority at Treasury Prime, what's more important, being the first employee or being the first partner?
Oh yeah, yeah. It's say all the time. I think my employee number should be up there. Not. But we'll see.
We're all equal. What are you talking about, Steve?
Well, my question, Jeff, so a couple for you. Tell me a little bit about, you said it took you about 4 years to join. Was that just setting yourself up to take the leap into this startup, join this startup?
Yeah, yeah. Like you said,
Yeah, the you have to be.
family. Definitely didn't ever consider myself gonna be joining startup world. So it took a few phone calls from Chris to get the convincing to come on over. But like I said, it's been one of the best decisions I've made.
I love it. He closed the deal. That's all I'm taking from it, right? He dug in and he stuck with that sales cycle. Okay, well, before I turn it over to Mr. Bishop for his next question, Jeff, you alluded to the fact that a couple of those banks that you had previously mentioned may not be around in the same fashion that as when you were representatives. So, I think it's a testament to the way that the banking industry as a whole is changing. Lots of shifts that we see going on. You don't have to illustrate any more than that, but agree. Yeah, you don't have to.
No, happy to. Yeah. So like you said, it's constantly changing landscape out there. So Radius Bank was acquired by Lending Club. I had left the bank before that happened, but a lot of the foundation was there to get that acquisition to be possible. And then the bank I was last at before joining Treasury Prime, Bank Prov, was just announced an acquisition from another local community bank here in Massachusetts, Needham Bank. So that that's why I referenced those two banks, at least in name, are no longer going to be around.
Here's what I'm taking from this conversation. Jeff Nowicki comes in and sets an FI up for success so that they are positioned to sell and earn their shareholders massive profits. This is what I'm learning from
The numbers don't lie. It's right.
the numbers don't lie. So maybe it's not correlation, maybe it is causation. Bravo, kind sir. All right, Steve, I have dominated the floor enough for now. I'll turn it over to you to ask.
Well, we've heard about you as individuals, but can you tell us a little bit about Treasury Prime and what people should know about the TP story?
Yeah, I'll start, Jeff, and then you can jump in and add whatever you'd like. So from the get go, Treasury Prime's mission has always been to modernize banking in the United States. And we've chosen a very specific way to start to tackle that problem. As product people and technologists, we're like, hey, we had an experience at Silicon Valley Bank. The founders of Treasury Prime worked there for a while. And they're like, well, banking infrastructure is really challenging. And there's also a pretty massive demand from these tech companies, these fintechs that want to build financial products for people. And the reason they want to do this is because they believe that they can build a better experience than the banks. And the real challenge is that a bank is servicing such a large group, area, surface, community that it's hard for them to create these bespoke experiences for the end customer. And so that's where I think one of the biggest values of fintechs come in. They can come in and they can build a specific experience for a specific customer, but they will rely on a financial institution for all the banking services. And so we really wanted to facilitate that partnership through technology. And so from the get-go, Treasury Prime has built out technology, and that's what our platform is today, to enable banks to then be able to partner with embedded finance players or to build a specific digital brand if that's what they wanted to do, to really enter into this new era of financial services that are more specific and tailored to the end customer.
Well said.
That's great. So, well, good overview. Um, so in everything Remy said, you could definitely hear that it was all focused around the banks and the FIs and getting them capable to do more. Um, and that's absolutely what we say every single day. Our client, our primary client is the bank. Users, of course, are the embedded folks using the platform, and they need to be happy. So our banks are happy, but absolutely, unquestionably, our client is the bank. So the banks can turn on and do more and bring on valuable deposits, fee revenue, extend their products to new areas that they otherwise wouldn't be able to touch.
I think that's an important designation. Oh, Steve, you're unfrozen now. At least you were a little frozen for me, but at least you had a respectable look on your face. It wasn't anything embarrassing. Happy about that. But to that point, Jeff, that is not something that is always common or translated or embraced as across the marketplace. I say that because there are different models in which embedded banking and players, infrastructure providers such as yourselves, such as Treasury Prime, go to market with fintechs and or banks. And you have really illustrated a direct to bank type of model. Correct me if I'm misunderstanding or thinking differently in my head, but that is the way I understand it. And you have the partnership with the FI. The FI then has the partnership with the fintech. And I truly do think that's an important designation for people to understand. And it's one that you have recently embraced. And if I may ask, why is that important from the Treasury Prime point of view to embrace that type of model?
Sure. Yeah, from the founding, we always believed that the bank needed to be in the driver's seat of the programs. Like you mentioned, there's many other models out there, and they're zero bash or change on what they're doing. It was just our philosophy that we felt like the banks needed to be in the driver's seat, controlling the programs, making the decisions. Um, like Remy said, other than me, we're all technologists at Treasury Prime for the most part. Uh, we shouldn't be the ones making the decisions on compliance or what KYC vendor or what scoring there should be. We felt like that's the bank's expertise. We'll do what we do very well, which is the technology, and the bank does what they've historically always done and always been responsible for, which is the clients, the AML, the relationships that they need to build to be good bankers. So
It
that was
fundamentally
always the strategy. The the shift that we made was really it it caused a lot of waves, but we didn't really shift all that much. With the only strategic change that we made was contracting. When we were the ones that would contract with the fintech and have everything combined together, it got muddy. People usually tend to go to the person they bought something from to ask questions down the line, or can I do this? Should I do that? And so with us changing the contracting aspect of it, it just drew a clearer line of no fintech. That's a question you need to ask the bank. You need to ask the bank if you can do that. We can make it work technology wise, but the bank needs to say they're okay with it.
It's why
Yeah, we've always believed that the banks should do the banking. Like, I don't understand a world where like there are other entities doing banking. Like, we have a whole system in this country, and we have these charters and regulations, and it is construct that exists to really support this. Um, and the only reason that we ever participated in, for example, the contracting that Jeff mentioned, is to solve an operational burden for the financial institutions. It wasn't because we had a desire to own any of it. It's because we were in fintech and embedded finance at its infancy, and we wanted to help financial institutions along um, as they developed their programs, as they developed levels of sophistication. And we also reached a point where that maturity started to exist, and so it gave us even more reason to be able to shift away and to play more of an enabling role to these financial institutions versus actually taking on that operational burden.
the through line makes sense to me. You saw a need early on to help match these providers together, the fintechs and the banks, as banking as a service was this burgeoning space that we see. And to your point now, with the maturity that we see in the marketplace, that one check, that neck to choke philosophy, as I've always, thought of it in terms of a seller, you purchase something, Jeff, to your point, you know exactly who to go to with support related issues or billing issues or general questions about the partnership, also makes perfect sense with this through line. So thank you both for your input on that.
And so,
Over to you, Mr. Mitchell.
like once you have, so we talked about Bank Direct, banks that have the contract. What does a successful program look like? When you look at banks that have had success, what do you think are the key contributors to that success?
I think banks coming in knowing who they are, knowing what they're already good at, is important. So if you have a community bank who's historically always served commercial clients coming in and saying, "Yeah, we'll do retail, uh, embedded," that's usually not a recipe for success. So really having the bank hold the mirror up. What are we strategically good at? What do we know, and especially on the compliance AML side, and what can we extend, or with the help of a technology partner, into new arenas? And that's what we try to have conversations with the banks at the beginning, and really getting their buy box with programs up front, so we can customize like who we bring to the table. Because even though we're not directly signing programs anymore, we're very much still actively out there sourcing leads and opportunities. And we're in Silicon Valley, we're in the space. Folks come to us, so we're definitely making introductions and making matches to our banks. Um, so we need to know who they want to see, what they want to do, and that just helps everything go smoother if that buy box is clear.
No, thank you for mentioning that, by the way, before we go on. I do find that in conversations that I have with community bankers about banking as a service, it feels somewhat nebulous because there's this impression that these bankers have to do something different than their comfort level. In your example, commercial to retail. And just to put an exclamation point on what you just said, that doesn't have to be the case. Your banking as a service programs can entirely mimic the models that you use or the customer segments that you cater to right now within your current FI structure or affinity groups that you interact with. We see CDFI institutions that are in the BaaS space that continue to partner with fintechs that serve various market segments that they would see on their community side. So thank you for mentioning that, Jeff. That's at least what popped up for me, is that you don't have to do things entirely differently or cater to different segments outside of your normal segments. You're just extending out through technology to reach a wider audience through these fintech relationships. Perfect. All right. Steve, do you have another question, or do you
I
think that?
actually I do, because like extending like your what you are good at, and then I'll let you ask 2 questions in a row, Stacy. But her
Fine. You can take 12.
um
We traded each our kids.
I recently saw that People Trust Credit Union uh has a partnership with Treasury Prime, and I haven't seen credit unions, their membership rules, those challenges in embedded finance. But could you talk a little bit about that, and like, is there a play for credit unions, or I don't even know how that works.
Yeah, absolutely. And I would say that good lead in. So what we were just talking about in terms of having banks do what, or FIs do what they've historically been good at. Part of that conversation is you don't have to do 20, 30, 50, 100, 200 programs to have a successful embedded platform. You could be doing much less. Have a manageable amount that is focused in a key area, and have that just be one of your deposit pillars. No one's saying that you need to say go into embedded and have that be 75% of your deposit base in 5 years. No, why can't it be just 20%? And that's just one of your key pillars, just like commercial or retail, anything else, any other business line that you go into. So when you look at it from that frame, now you can understand a little bit how a credit union can get involved in it. If a credit union has membership criteria that is, call it limited, um, than a traditional bank might have, well, what is that criteria? And in the case of People Trust Federal Credit Union, their membership is based around the underserved community. Now, that that definitely still opens them up to a lot of opportunities in the fintech space, because there are a lot of fintechs out there servicing that exact need. So that fits into their membership base. Would a credit union that is for San Francisco firefighters and their families, like, maybe that's not a perfect use case, but there's still plenty of credit unions out there with a membership criteria that could very well play. And if you're just looking at, hey, 5 programs, that's success for me. Is there 5 programs that we reasonably can go out and that servicing this bucket? Yeah, absolutely. Then let's get into it.
I am so glad we're having this conversation, Jeff, because I do find often that people do, speaking to community bankers and now credit unions in the mix, there is this perception that you have to go big or not at all. You have to be the next Cross River. You have to be the next Coastal. And that is simply not the case. In fact, most of the time when I'm speaking with bankers interested in embedded banking, they're trying to find what that magical number of programs is for them, and they always tend to overshoot on what good looks like. When you begin to implement 1 program, 2 programs, 3 programs, you start seeing that growth, and I think bankers are learning that they don't have to have as big of a program as they might have initially thought to grow deposits to the levels that they desired, to see really noticeable improvements as well in net interest income. It's surprising how the right focus on the right partners can improve the bank's books overall. And 4 programs might be their number of programs. So before it's just a pure train of thought right there that I'm going to take the liberty, gentlemen, because I'm still speaking at this point, to extend out one more time, and that is at a recent the fintech meetup most recently in Vegas, chatting with some players that are in the space right now that have been established for years. They are even saying, we are not at a stage where we're bringing on more programs. We're comfortable. We feel like we can handle these programs compliantly, and operationally, we're good. In fact, we are recommending these fintechs coming into us to go to other sponsor banks or to speak to banks that are interested in getting into the space. I offer that just as a thought exercise for all of us and anyone that might be listening to this, because I'd invite you to think through the fact that it's a very nice open space. Nobody wants to purely dominate the market. Everyone understands that there's room, and every FI has their own particular comfort level. Am I off base on this, or are the conversations I've been having are they just with folks that feel this way? Tell me if I'm off base, guys.
No, I think you're right. Um, I think bankers are inherently competitive sometimes, so they all want the best deals. But uh, this whole space, where our thesis is, this whole space works better as a network, and people working together. And a big product that we have is our one key product, which allows programs to be utilized on top of more than one institution. So
Mm.
at first glance, you might say like, well, a banker is not going to want that. They don't want to let a good program be partnered with another one. But at the end of the day, again, sticking to what you're good at, if a bank has a good program, but they want to get into maybe uh, they're running a retail program, they want to offer small business accounts, but that's not something the bank's ever done before.
Mm.
Why are you going to extend yourself to get into something that you can't really do versus just let them partner for that side of their business with another one of the banks in the Treasury Prime network? And that fintech doesn't need to do another build, doesn't need to go to another tech stack, doesn't need to split their platform fees and stuff like that. Um, they can manage it all like it's on one bank, but having it be two managing on the back end.
That's that's impressive, and I'll be candid, I hadn't heard about that type of a model where you have one fintech simultaneously using two different sponsor banks for different parts of their business. And I love that you've opened my mind to that. I had heard the more traditional, we have a sponsor bank, our primary, and then a backup, a secondary sponsor bank. But that's different than what you just described, correct, Jeff?
Yeah, definitely. Yeah.
And as Jeff said, it all comes down to the core competencies of the bank and also what their risk profile looks like. So there are some fintechs on the platform that are partnering with multiple banks at Treasury Prime, where the reason they might be at more than one bank is because part of their business is focused, or their focus is across multiple industries. And so different banks have different core competencies in different industries. And so it makes more sense for them to do some business with one financial institution and some business with another based on the industry of the end customer. So that's another example.
That's perfect. I shouldn't be surprised that Treasury Prime opened my mind to something new today. You guys were so innovative. Or I'm behind, probably a mixture of both. But I appreciate you guys being so cordial about sharing that information with me.
And one more thing I would say too on that front and why the network play is so important, concentration risk is a real concern. Everyone understands why a fintech would be concerned about concentration risk with only one partner. But on the bank side too, if you have a program or two that really take off, and now all of a sudden you're looking at the deposits they're bringing in exceed the deposits in the rest of the bank, even if you're selling those off, you're still, from an operation point of view, you're exposed on the concentration aspect of it. So why wouldn't a bank be willing to let a fintech bring in a second program to have their excess? Or, hey, we're good with this amount. Let the rest go somewhere else. And as you're looking at this from a bank point of view, it is a much cleaner, safer, and from a regulatory point exam, if you're going in, you're saying like, okay, I got 5 programs that make up $2 billion in deposits, and we're comfortable with these 5. We got a part of each one of them. Versus if you just go, we got one program, $2 billion, and they go, that's $2 billion out the door. That like it's just a safer product all the way around for everyone involved if it's spread across the network.
Love the diversification aspect. I'm going to lean into that more. All right, Steve, I've asked various follow-ups because we do try to teach taking turns in our household. Over to you. You get one.
I don't know that our children are good at taking turns. So, I mean, if you have one, I'll let you go. Um,
I hope in one.
but I think just my thoughts. I've heard a lot when I first started looking at embedded finance. Exclusivity was banks wanted exclusivity, and it's almost flipped. I know examiners had asked me about it, and my response was I would never hold a fintech captive, even if I have it in my contract, because they need that redundancy. And there were a couple of fintechs that the prior banks they were at had some challenges, and they needed like their whole business model was at risk because they didn't have that redundancy. So I think it's in a fintech's best interest to have diversification plans, and it's also in a bank's best interest to not just focus on that exclusivity of doing. Those are my thoughts on, um, yeah. But
I think you're right.
speaking of that, what are the trends, especially from a regulatory environment? What's top of mind for you guys these days?
It's definitely
say
different. Go ahead.
Yeah. I mean, I would say just generally, I tend to be somewhat product focused. There is a lot of regulatory movement in the world of stablecoins. Um, there is not a clear or obvious solution for community banks to participate in this, we'll call it a new economy. And we're always thinking about how to service our community banks. And so we're actively participating in conversations with different groups and different banks to identify how to best serve them. But it's a thing. It's a thing that's not going away. And so identifying the way that they can participate that is useful to them, I think is really important to us. So that's always top of mind, just thinking about one of the most important things that's happening in regulation right now. That's probably my comment about that. Beyond that, I would say that we are in an era of financial innovation. I think this comes in waves. There are peaks and valleys. And right now, based on the way that the regulatory winds are blowing, there is a little bit of openness from financial institutions to start thinking about risk differently, which to me opens up opportunity for financial innovation. So instead of it being the vanilla use case, maybe it's just the slightly next iteration of that, not a complete shift, just something that just slightly different. But if you spend enough time thinking about it and you're having the right conversations and you're aligned with whoever you want to work with on this, you can start to do something that is a little new and a little interesting, and you can take very small baby steps, and you can start to shift how people and businesses interact with finance in this country. And I think it's an extremely exciting time right now in the United States.
Uh, have you
Agree.
seen much change in the regulatory environment from now versus, say, a year ago?
I would say so, but the thing that I think is hard to pull apart is everyone that experienced the regulatory environment a year ago has learned how to do things better.
That's a good point.
And so now it's you can't obviously say everything's easier now. It could just be that everyone is just better at operating in innovation and technology or do partnerships. So I don't think you can completely separate those things.
No, I would agree, and I was being a bit facetious in that question. I think we have seen some regulatory things lighten the burden, maybe, but that doesn't mean that you can't change. You want to have a model that will be compliant in any regulatory environment, not just what the current one might be, because it is cyclical. But Mr. Nowicki, you have any things that are top of mind?
No, I think the last thing that you just said was key. Something that we talk about a lot is not just getting sucked into, hey, this seems like someone could get away with this now. Should we entertain, right? And no, will this hold snuff in the next regime? Will this be just long term good successful business decision? And that's what we're holding our hats on, not necessarily what it's like today in a regulatory environment. So that is a big part of what we talk about all the time.
When I think in terms of the regulatory environment, just like you gentlemen, I do think of two sides. Well, there's really three. The regulators themselves, I think, have also been much clearer about expectations with programs and BaaS as a whole. Um, to Remy's point, there is such exciting technology, fintechs that are coming to market right now with stable coins and with other solutions. Fill in the blank, it's going to have AI related to it. So I think these are all areas that banks seem to be watching closely. And it's an exciting time to be evaluating this technology for your own bank vendor partnerships, but also in a bank sponsor type of partnership. The last thing I'll mention about this space specifically is that I'm also seeing really exciting changes coming into play with RegTech solutions. There are players that we've seen in this space for a while, like Themis, that continues to evolve, Cable doing exciting things out there, Cobalt Labs, Narrative. These players that are now doing things for the sake of evaluating partnerships, ensuring details are in place, ensuring that ongoing oversight exists beyond just the initial onboarding. That makes it an even more interesting time to be evaluating banking as a service if you're new to it. I don't know if that strikes or resonates with any of you all, but RegTech for me is a pretty broad category because of those three levels or players. And across the board, it may not be the sexiest topic, but it is a darn fun time to be looking at and talking about RegTech.
Yeah, I think a lot of the challenges that financial institutions had over the last few years in the regulatory environment that existed, um, a lot of it was due because the oversight is hard, right? Like managing programs, it's hard. There's a lot of data, there's a lot of information, there are a lot of checks you need to do. You need to keep doing it over and over again. You're trying to establish trust. And this is like one of the responsibilities of a financial institution that's really challenging. And so I think it's extremely exciting that we're seeing this surge of reg tech companies out there that like lessen this burden to make it easier and make it more manageable and realistic for financial institutions to manage programs and to scale programs, which is also very significant.
Absolutely. Because I think the regulatory burden, the compliance burden is one of the big hurdles that a bank has to culturally overcome or at least get past when they are thinking about the banking as a service space. And just the sheer volume of players out there now that do a great job, it feels lighter. It feels more approachable, I think, now than ever with banking as a service because of these shifts that we're seeing in the regulatory environment overall and the tech that's coming into play, both fintechs doing cool things, but solution providers making it easier to manage these partnerships. Well, Steve, I'll let you ask another question since I cannot seem to keep my mouth shut. Go ahead.
I wanted to pause there to make sure you were done talking before I kn- I um I want to be cognizant of time. So I let's move past the now and what's next. So it's a two-part question. Like, what do you see on the near term horizon, and then in let's say 2030, what do you think it is? Like, what is your hope that people remember about Treasury Prime and your contributions over the next 5 years or the next decade?
I think like what you're gonna see next from Treasury Prime is more um trying to unlock capabilities for particularly credit unions or regionals um that they otherwise would have difficulty product wise getting their hands into, or whether it's um stablecoin or digital asset payments as an example, or something in the stablecoin route. How do we unlock the ability for a community bank to get access to that in a reasonable way? Um, Same thing, whether it's international or could be a number of different things, FedNow, etc. So that's what you're going to see a lot of our focus on the product front is unlocking our community banks to be able to get access to things that maybe historically might be difficult for them to do.
From like a 30-year from now perspective, I mean, I want Treasury Prime to be known as like the de facto modernization layer for financial institutions. For sure in the United States, but if we're talking 30 years, like globally, like there's no reason why like everything couldn't operate in like an extremely more efficient, modern way, and where we give all of the tools and the power to the financial institutions to be able to operate in, as I've said before, like a new era of like financial innovation. So I want Treasury Prime to be like the playmaker in that entire world.
We'll be cheering you on, guys.
Appreciate it.
I'm going to take the final question, Steve, if that's okay with you.
Absolutely. Please.
All right. Well, at least my final question. All right. I guess, gentlemen, I am interested to know if there is a belief that you hold about the embedded banking space that you just feel in your core that not everyone is on board with yet.
I don't think it has really hit. I don't think that like end customers really care or understand, who they're interfacing with for their financial services. But I don't think it's really hit all the financial institutions how quickly that customer experience is happening through fintechs. Like I don't want to call it an outflow of deposits or payment transactions or whatever it might be, because it's still happening through financial institutions, but it's being concentrated to the ones that are modernizing and the ones that are participating in this space. And it's happening very quickly. And so I think that that's one of the things that is not necessarily obvious. It's not going to be like in 10 years, you're like, oh, I guess I can just figure out what my embedded finance strategy is. You need to start thinking about it right now if you want to be able to participate.
Couldn't agree more. And I think it's more and more banks are coming around to it, but I still think with 4,500 something banks and same thing, credit unions, there's still a lot to go in terms of getting their heads wrapped around that. Just because the logo in the app that the end user is logging into might not be yours doesn't mean that's not your client. Doesn't mean that's not your product. Doesn't mean that's not you supporting in the deposits coming to the bank in the same way. So I do think there's a lot of, and maybe call it's banker ego, where they want their logo, their name on everything. But I do think that's going to be shifting.
I want to give a quick example to add on to what Jeff said. I had a conversation as well at FinTech Meetup with a large financial institution. And I was talking to them about a large commercial neobank. And it would be an incredible fit for them to partner with this large commercial neobank and support, the sponsorship there, pull the deposits, facilitate the transactions. And this person said, a senior person at this bank said, oh, we were worried about that. We've had conversations about it, but if we were to sponsor them, it would cannibalize our business. And I was like, what are you talking about? No, you get the deposits and the transactions. I don't understand why this is an issue. But to Jeff's point, that's still how they're thinking about it. They're like, oh, we would be enabling a competitor, which I don't understand.
I think it's such a fundamental shift from the traditional banking mindset. I would tell you, I think there's a lot of room for core players to even evaluate banking as a service. We've seen some core players that have started exploring it, embracing it a bit. We've seen others that continue to press forward with fintechs need to integrate into our apps. And my challenge is always just thinking of myself, not only as a person that has grown up in this space and operated in this space, but of course, I'm also a person that transacts outside of my business world. I'm out there, using my Target Red Card, much to Steve's chagrin. So I'm a TD Bank customer in that regard. I am out there as a modern consumer not going to my bank to order DoorDash or to order my Uber. I'm doing that through apps that are specialized in those elements and that technology with their beautiful UI and UX, and it's augmenting the services being provided by those bank sponsors and opening up the world to those bank sponsors without those individuals ever having to try to figure out the tech side of it or creating something. So I say that because I'm just fearful that bankers that embrace this methodology too long or cling to this mindset of nope, traditional partner routes uh, are the only way to go. Anything else is a competitor or cannibalizing on our business. I think they will be the ones that in 5 to 10 years are sitting there trying to figure out their embedded strategy. And there's going to be a lot of traction made between now and that time.
Agreed.
Yeah. That reminds me, I need to place a Target order after this.
Great.
So.
Great. Jeff, Remy, thank you so much for joining us. This has been a great conversation. Really enjoyed it. But are there any final thoughts? Any takeaways?
Appreciate everything you guys are doing for the space and getting more
Definitely.
knowledge out there.
Yeah, the last thing that I'll say is, we've talked a lot about the evolution of embedded finance. We've talked about what Treasury Prime does. I would be remiss if I didn't say we're the best at it. So, financial institutions out there, give us a call.
Give him a call. And where can they find you? Obviously, the Treasury Prime website. Follow Remy and Jeff on LinkedIn. And I imagine that you guys might be hitting the fall circuit and the spring circuits coming up. Can you share with us where you'll be this fall?
Yeah, we'll be. I think the next one coming up might be the Jam FinTop conference. They're one of our investors. We've got the Finovate ball in New York on the docket. We've got our VP and head of customer service on a panel there. So definitely make sure you catch her, Kiana. And then
Money 2020.
Money 2020.
Money 20. You and 20,000 of our closest friends. No,
Exactly.
people. It feels.
It'll be good to see everyone again.
It will. It will. That'll be a heck of a dinner table conversation with all those folks. Thank you both so much for just the conversation and the insight that you bring to the table. Great gentlemen to know. Look them up. In fact, the entire company is chock full of individuals that are building great solutions, great experiences, and changing the way that we are going to be experiencing banking going forward. So with that, Remy, Jeff, Mr. Bishop, thank you all very much.
Thanks.
Thanks, everyone.